Today on the Tearsheet podcast.
We talk to our customers and ask them, what's the part that sucks the most about your financial experience? And they all said, my bank. But we're not a bank, so, we couldn't build a bank account, so we built something better. And then we launched this cash management account.
Welcome to the Tearsheet podcast. I'm Zack Miller. Brex is one of the fastest growing fintech startups in history. It may be the fastest growing startup in history. The company, founded by two Brazilian Stanford grads, began with a straightforward premise: to launch a corporate credit card that accelerates entrepreneurs and scaling businesses. From there, it's moved into rewards and travel programs tailored to specific industries. And recently, the firm launched Brex Cash, a business cash management account that helps companies simplify their financial operations and grow their businesses. Brex co-founder Henrique Dubugras joins me on the podcast to talk about the evolution of the company's product portfolio and the company's plans for the near future. From there, he shares his views on where the payments industry is headed in 2020 and beyond. Henrique Dubugras is my guest today on the Tearsheet podcast. Before we jump into the podcast, I wanted to introduce you to Outlier, Tearsheet's leading membership program. It's designed for top fintech and financial service professionals to stay on top daily of the biggest trends, the top companies, and the leaders of this next generation of finance. Find out more about it at tearsheet.co/outlier.
My name is Henrique Dubugras, and I'm the co-founder and co-CEO of Brex.
And what was your own personal sort of career trajectory that brought you to found Brex?
So my co-founder, Pedro, and I were both originally from Brazil, and we both originally started coding pretty young during our teenage years. And last year of high school, we started a payments business in Brazil called Cobranded. That was like the payment processing in Brazil, so like Stripe or PayPal in Brazil.
Mm-hmm. What year was this?
This was 2013.
Okay.
Then we sold the business in September 2016. We had some scale. We were roughly like 150 employees, maybe $1.5 billion in transaction volume. And we moved to the US to go to college. And then after a few months, we dropped out of college to start Brex. We started Brex because we saw that, startups had a tough time getting financial services. And other small businesses and medium-sized businesses as well. So we decided to basically, build financial services for companies. And our first product was a corporate card for startups. And since then we evolved to have, corporate cards for several verticals, but also we recently launched our new product, Brex Cash, which is a bank account replacement, a cash management account.
So can we talk about some of those recent announcements? Because I know we want to save a little bit of time at the end of this conversation to talk about sort of your view into the future for financial services. But I know there was also a co-branded card in there too, your first one.
Exactly.
So can we talk about, I guess, the recent product launches? We'll start with Brex Cash. What was the thinking there? Where was the need in the market that kind of pushed you to develop that?
So basically, we talk to our customers and ask them, what's the part that sucks the most about your financial experience? And they all said, my bank. But we're not a bank, so, we couldn't build a bank account, so we built something better. And then we launched this cash management account. And there's a few things. We think that companies pay way too much fees. So, we have no fees for wires or ACH or even international wires. And also, companies weren't getting any kind of yield on their money. So we gave them, some yield, actually, top of market yield this to date. And that's kind of the value proposition. And we also give you rewards as you pay. So, instead of charging you to send wires and ACH, we actually reward you. We give you points to do so.
What has feedback been, or any type of metrics you can share with us on Brex Cash?
We're still on a wait list, so the feedback has been overwhelmingly positive. We have a lot of people on our wait list, but we only onboarded maybe a couple hundred companies.
Okay.
Because it's still in the private beta.
And what are the plans for a more general rollout?
We're aiming for Q1 2020.
Okay. And what about the co-branded card? I mean, that's obviously a tried and true, model for banks in terms of issuing cards. What was the thinking there, and sort of, can you take us through sort of that partnership with Bank of the West?
Yeah, the very interesting thing is that we're doing kind of an inverse co-branded in which Brex is issuing the card, underwriting, funding, and Bank of the West is on the brand, right?
They're helping with
Which is
distribution, all right?
exactly, but it's funny because it's a complete
Yeah.
opposite model of the past, right? In which the banks were co-branding for companies. So basically, that is kind of like the model.
And is that a model you're going to continue to roll out? Are you looking for other partners there?
We're very, very selective with partners. We think it needs to have a very complementary user base and complementary product sets. So I wouldn't say it's something we're looking to expand, too much, but it's something we're definitely open to.
And is there anything else you can share with listeners on, I guess, your upcoming pipeline? What should we be looking out for from Brex in 2020?
I think we're with Brex. A lot of our startups are growing, so we're building a lot of stuff to support companies that are reaching certain scale.
Mm-hmm.
And also we're looking to expanding to more verticals that we're serving today. It's not even that I can't announce. We don't actually know what are the next verticals.
Interesting. And what sort of prompted the vertical approach? Can you take us through sort of, I guess, the historical decision making there?
Yeah. So basically, our thesis is that these businesses they're not the same. Startups and e-commerce. They're all like pretty different businesses. Um, so what that means is we created like customized functionality and customized rewards and customized distribution channels for each of these verticals. So we try like not to put a one size fits all product on top of these companies.
And I guess where's the trigger in the sense of launching a new vertical? Like, do you guys plan on rolling out like a whole slew of new verticals, or sort of do you have the
Yeah.
core sort of offering now?
Yeah, the thing for us is it's more around if we have like super strong product market fit
Mm-hmm.
on the verticals. If we do have strong product market fit, uh, then we would roll out a vertical. But if we don't, if we think that other banks and other cards would be better than us for that vertical, then we wouldn't.
Okay, great. So I'd like in the remaining time of this call, if we can, I know you had some thoughts on what the world's going to look like in 2020. Can we start there and start to go through sort of some of your predictions?
Yeah, of course, of course. So we put this a little bit together because a lot of people ask us like, oh, what do you think is going on in fintech, and what do you think are kind of like the new things that and new trends that are keep going. And we
Mm-hmm.
think that there are kind of like three key new trends that are going to expand in 2020. The first one is payments means loans. Meets loans. So what that means for us, as I think is people are realizing more and more that it's much easier to lend if you already have a relationship with a customer through some product than if you're trying to create a relationship with a customer for the first time through lending. And vice versa. So, we think that all the payment companies, Square and Stripe already are doing it, but all the other payment companies are going to start rolling into lending. But also we believe that the lending companies are going to start rolling into payments and other kind of like higher engagement products. So SoFi with launching of SoFi Money, we believe that they're going to start dabbling more into payment products as well. Not only just doing lending. So I think we saw Bluevine launching, savings account recently for businesses. We believe all these businesses are going to start launching more kind of like high engagement products.
So that's interesting that things are kind of converging from different directions. I mean, and you guys are sort of right in the middle there with your core offering, right?
Yeah, exactly. We're right in the middle, in which our first product is somewhat lending, somewhat payments.
Well, okay. So what about e-commerce? Where does e-commerce fit in terms of the trends and
Yeah,
sort of fintech? Yeah.
that's actually my next point, which is we believe that fintech is seeing that e-commerce is actually a super interesting market. So I think with Shopify, I think their stock, if I'm not mistaken, went from like 10 billion to like 30 billion in like 2 years or something like that, or 40 billion now over 2 years. And we believe that that kind of sparked a little bit the entire industry to see e-commerce as like, wow, this thing is big. And so, between Affirm and Klarna with their products, Brex e-commerce, Clearbank, I think a lot of, and Shopify itself, with Shopify Capital and other products they might launch, are seeing that e-commerce is the future and it's not all Amazon. And, we're going towards it, and building more products for them.
Okay. And you mentioned there were three different ideas, predictions you had for the next year. What was the third?
And the third one is, and this is, we'll take a little bit of credit for this, but I think a lot of people notice that cards is a good business. So we've seen businesses like Expensify and Scale Factor basically launch their own cards besides Stripe as well. And I think with both Stripe and Marqeta providing the infrastructure to to be much easier to issue cards, I think a lot more people are going to enter into the space. And I think that, in my opinion, the market is going to do, there's a few things, card business is not only a technology business, it's also a financial services business. So in my opinion, those who can actually create a financial services DNA within the company will strive. And those who just see it as a side project won't. If that makes sense.
And so, I guess Henrique, the cards, the convergence of cards, is that so much what you were talking about? Payments meeting loans. Like, where are the opportunities? It's niche platforms that already have clients moving into cards. Is that what you're describing?
Yeah, I think I don't know if it's necessarily an opportunity, but it's definitely a trend that software companies that are providing some sort of verticalized software or general purpose software for companies moving into cards as a way to monetize. So, that was true for payments for a while, right? So you have a bunch of vertical SaaS. So for example, Toast moving into payments and capital. And there's a few other versions of this, Mind, I think Mindset. And I think cards are the new are the new payments in the sense of a way to monetize after SaaS.
So in the remaining time we have, Henrique, I guess given these three trends, like what does that spell for customers, whether they're, shopping in e-commerce or their borrowers? Like what do these three sort of trends mean for the end user?
Yeah, I think what they mean is basically you're going to start shopping financial services from much broader providers than banks. So, today, I think before you used to have your relationship with your bank and then, everyone else. And I think you're going to start having, traditionally relationships that you had only with a bank now with, multiple players.
So non-bank providers, non-bank lenders, the people are going to essentially bank with the brands or the systems that they use most frequently?
Yes, exactly.
Got it. Henrique, thank you for joining us on the Tearsheet podcast today.
Thank you so much.